Let me start with a simple truth today, and it is that investing is hard. Not because the math is complicated, but because it tests your mind. It pushes your emotions to the limit and forces you to battle your own instincts. So, in today's episode of the Inner Game podcast, I talk about something every investor needs to hear, especially when markets are rough like they are now. I have repeated time and again that investing is not just about numbers, but about understanding how we think, how we react, and how we survive. So today, I want to share with you 13 thoughts that I am thinking about in the current market downturn. These thoughts have evolved over my experience of being an investor over the past 20 plus years and seeing several such and even worse market downturns. And to say the least, these have shaped the way I approach investing at all times, and especially when it seems the markets and my portfolio are falling apart. So let's start with the first thought, and it is that the market is a pendulum, not a straight line. So markets don't just go up in a straight line, they swing back and forth between greed and fear. When prices are rising, it can feel like they'll never come down. And when they crash or fall, it can feel that they'll never recover. But history shows us this is not true. The markets is like a pendulum that constantly overshoots in either directions, both directions. The pain you feel during a downturn is often the very thing that sets up the next upswing. Understanding this is very important because it helps you avoid making emotional decisions when the pendulum swings too far one way. So the question you need to ask yourself is that, am I mentally prepared for both extremes, or do I only feel comfortable when things are going my way? Thought number 2, investors chase certainty in an uncertain game. Now, every time market drops, people look for someone who can give them answers. When will it recover? How bad will it get? But the truth is, nobody knows. Markets are uncertain, just like life. And seeking certainty often leads to panic-driven decisions. You sell because you're scared, or you jump back in too quickly because you want to catch the rebound. Either way, you end up hurting yourself. The real skill is learning to be okay with not knowing. So reflect on this question. Am I seeking comfort in predictions, or am I building the mental strength to handle uncertainty? Thought number 3. Falling markets don't just destroy wealth, they reveal who we are. Now, it's easy to call yourself a long-term investor when your portfolio is growing. But when it drops by 30% or more, or 40%, and every decline screams recessions or crash, your real self shows up. Are you calm, or are you panicking? Down markets expose the gap between who we think we are and who we really are. They force us to confront our true tolerance for risks and our patience. And this is when we find out if we actually believe in our investments, or if we are just enjoying the ride up. Thought number 4, panic is more infectious than any virus. When you see others selling, it triggers something deep inside you, and that is fear. And it's biological. Our brains are wired for survival. If everyone is running from a bear, you run too. But in the market, this instinct can lead to disasters. Panic spreads fast, and even rational people get caught up in it. Recognizing this can help you pause and stick to your financial plan. And the key question you need to ask here is that, am I sticking to my long-term plan, or am I catching the emotional virus from others? Thought number 5, wealth is grown in silence, but is lost in noise. Now, building wealth happens quietly. You invest, you hold, you wait, but losing wealth, that usually happens in noise. It's all kind of noise, like headlines, social media, panic. They make you react. And down markets amplify that noise. You have to tune it out. Ask yourself, am I listening to the whispers of my plan or the shouts of the crowd? Thought number 6, the best investors are masters of their own minds. The greatest investors don't win because they know more. They win because they control their emotions. When markets fall, they stay calm. When others panic, they think rationally. Investing, of course, is a mental game as much as a financial one. So ask yourself this question. Am I training my mind to endure, or am I letting the market train me to react? Thought number 7, temporary losses become permanent when we lose faith. Stock prices recover, but only if you still own them. The market plays tricks on you. It makes temporary pain feel permanent. That's when you sell, and that's when losses become real. Now, the key question to ask here is, Do I believe in what I own, or am I holding things I don't understand? Thought number 8, our time frames shape our reality. Now, a market drop feels like the end of the world if you were thinking in days or weeks or even months. But stretch that view out to 10 years or 20 years, and those crashes or falls start to look like blips. Time changes your perspective, it smooths out the bumps. That's why having a long term mindset is so powerful. The question you should ask yourself here is, am I viewing my portfolio with a microscope or a telescope? Thought number 9, most people want the rewards without the pain. Now, everyone loves the idea of making money in the market, but the truth is, there's a price for those returns, and that price is volatility. You have to endure the bad times to get the good ones. Many people want the returns without the pain, but that's not how investing works. Just look at any great investor, and they have battle scars. They've watched their portfolio get cut in half, but they stayed in the game because they knew suffering is the price you pay for long term success. Many people, though, quit when the pain starts. They want a refund on the suffering, but that's not how it works. The key question here is, am I willing to suffer now to thrive later, or will I retreat and lock in my losses? Thought number 10, what you survive defines your future. A portfolio that survives a crash is stronger than one built on luck or leverage. Survival is everything. If you can endure the worst, you give yourself a chance to thrive in the future. So reflect on this question. Am I building a portfolio to impress others, or one that will let me survive anything? Thought number 11, cash is a superpower. In tough times, cash is king, not because it earns you a return, but because it gives you the freedom to act when others can't. When the market is tanking and people are forced to sell, cash lets you buy quality assets at a discount. It gives you breathing room and power when opportunities arise. So ask yourself, do I see cash as a zero return game or as a dry powder for my future opportunities? Thought number 12, real wealth is built in downturns, not in upturns. When markets are rising, everyone looks smart. But real wealth is often built in the hardest of times, when prices are low, when fear is high, and you have the courage to buy quality assets. These are the moments that separate good investors from the rest. Because when markets recover, those who bought during the panic are the ones who thrive. So ask yourself, am I positioning myself to take advantage, or am I running with the crowd? Thought number 13, valuation matters, but psychology dominates the short term. We all love a bargain. When stocks get cheap, it's tempting to think they'll bounce back right away. But that's not how it works. Stocks can stay cheap and even get cheaper for a long time. Sentiment drives short term moves more than valuation. So, knowing a stock is a good deal is one thing. Having the patience to hold it when it gets even cheaper, that's where the real challenge lies. So, ask yourself, do I have the temperament to hold what's undervalued, even if it gets cheaper? And finally, a bonus thought number 14, which is that the inner game is everything. Because in the end, the real challenge in investing is not just about picking the right stocks or timing the market perfectly. It's about mastering your mindset. Markets will always test you. There will be ups and downs. There will be panics and euphoria. But what truly separates successful investors from the rest is how they manage their emotions and stay the course when things get tough. So your mindset is your greatest asset. If you found this episode helpful, please like, subscribe, and share it with others who might benefit. It helps me reach more people and continue creating content to strengthen your inner game. Thank you for being part of this journey. See you the next time.